In today's video I want to show you an example of how angled supply and demand zones can unveil good trade opportunities in price. We are going to study an example in the daily chart of the US dollar versus the Canadian dollar, but keep in mind that these techniques can be applied in the same way in all timeframes and all markets. This means you can transpose the technique to whatever market you enjoy trading. From number 1 to number 6 we can see price flowing to the upside in a relatively natural motion, meaning that we can spot a few contrary flows, but the major dimension doesn't seem to be affected by the noises of the minor dimension after all. What I want you to pay attention to is that there are line patterns we can use in situations like this that will shed some light into the underlying structures of the market. For example, we can draw a frequency line between high number 2 and high number 4 to determine a specific angle for this market. In an uptrend we can derive lines from highs and extrapolate them to the lows since we want to catch where the next low will be. Observe that if we duplicate the frequency line between 2 and 4 to the absolute low number 1, we will be able to spot something interesting. Notice how the line in number 1 cuts through some of the frequencies found in low number 3 and low number 5. This means that we have identified the general angle on which this market is operating in this particular point in time. Here we have to be careful because most traders will only count with the possibility that lines are good only until they work, but that's actually wrong. When lines stop working, we can also derive valuable information for trade context. Notice that between number 1 and number 5, price is hitting those parallel angles lines successfully, but in high number 6 the market fails to reach the upper line that has been working until number 5. This is a moment of inflection in the market for those who understand the subtleties of advanced price action. Another detail that can also be derived from a line is the fact that high number 6 fails to break and close above the level of high number 4. From a logical point of view, that means the buyers from low number 5 might not be as strong as the buyers from low number 3 for example. We can also assume that based on the shape of those upper tails in high number 6, which show clear failed attempts to the upside. At this point in time, it can be difficult to continue trusting such buyers and to ignore the rise of sellers to the controlling position of this market. As I said in the beginning of this video, we can also expand our view on the lines we already have, and one of the ways to do that is to create supply and demand zones out of angled lines. There is no reason why supply and demand zones should be only horizontal, so that's certainly a valid derivation. If we consider that the angled line coming out of number 1 is the upper line of a sloped supply and demand zone, we need to find other frequency to create the lower limit of this zone. We have the perfect scenario for that in this chart because in low number 3 and low number 5, price pierced down with more violence in certain points, and that created another level of frequency that can be spotted with a third blue line. Notice how this line catches the common ground between those two bigger spikes in lows 3 and 5, at the same time that it respects the predefined angle of highs 2 and 4. Observe that the identification of those two different levels of frequencies produce an up-sloping demand zone. This is an interesting idea because traders hardly ever think about supply and demand zones being angled like this, but those who perceive such a pattern might be able to take advantage of its benefits. Another detail in here can be derived from a rule regarding pitchforks called the Hagopian's rule. This rule simply states that if price fails to reach a line that has been working recently, it tends to go in the opposite direction more dramatically. Let's fast forward price action so we can see how the market interacts with this analysis, and to see if the ideas that have been laid out so far end up holding water. As it was alluded to by the extrapolation of the Hagopian's rule, price failed to meet the upper line in number 6, and then it reversed with a move downwards. The angled demand we have found also played out. Notice how price gets stuck within that zone for one candle, and then it continues to go down. Now we have an interesting situation that could lead to a trade because supply and demand zones work like support and resistance lines. Once they are broken, they can switch their quality. In this case, an angled demand zone can be turned into an angled supply zone, but remember that just this idea is not enough for a trade. In terms of context, we have the buyers from number 5 and number 3 being wiped out by the sellers from number 6. This narrative supports the idea that our angled demand zone could function as an angled supply zone. Depending on the behavior of price, if it reaches the angled supply zone, we can think about a short trade idea, so let's fast forward price action again to see what happens. Now price has reached the supply zone, and it created an inside candle followed by a clear bearish fractal candle. Beyond these two indications, notice that price is exactly in the level where it got stuck between the upper and lower limits of the demand zone. This is a clear short trade opportunity because we reached a point in the analysis where everything makes sense from a logical point of view, and we can find a causal link between all the elements of the analysis since the more abstract narrative level down to the concrete technique level. Let's see if price goes down from this point onwards. As you can see in the chart, price goes straight down after the fractal candle showing how the analysis was correct. This is one of those peculiar situations that show the richness of advanced technical analysis, and the level of accuracy that can be attained with it when you apply it correctly. If you enjoyed this example and wish to learn more about professional price analysis, check out the video courses available in the Strategy Store link in the video description. If you wish to support the channel, please click the like button, subscribe to the channel, activate the notifications button so you don't miss future uploads, and leave your feedback in the comment section below. Thank you for watching and I hope to see you in the next video.